What if I told you that Toronto, a city that's adding over 100,000 of people every year, is on track to have almost no new condos built by 2029? And this isn't a prediction, this is not a fear mongering, this is exactly what the construction pipeline shows us in the hard numbers that's going to happen over the next 5 years. Today we are diving into the 60,000 condo completions happening right now, and the supply cliff is straight ahead. In some areas like Mississauga, we have close to 9 months of inventory in the condo market. This is the kind of video that completely changes how you think about Toronto's real estate market, especially the condo market in the next few years. Let's get into this. So how did we get a 60,000 unit wave? Let's start with the shocker that I mentioned earlier. Toronto delivered about 30,000 condos in 2024 and another 30,000 condos in 2025. So it's almost 60,000 new units coming to the market in 2 years. To put that in the perspective, these levels normally take 4 to 5 years to complete. The reason is simple. These projects were launched back in the boom years. Pre-sales, pre-construction sales were strong back then, and developers hit financing requirement early, and the construction marched on even through the slowdown and the pandemic. That's why we are seeing such a massive surge of keys being handed out right now to the pre-construction buyers. But the pipeline behind those projects is emptying out fast. This is the last big wave that we are going to see for a long time. That's my opinion, and all the data that we have received supports that idea. I think the future is already decided. The most important fact in the memo that we just received is this one. On average, when it comes to high-rise condos, there's a 5-year lag between pre-sale and the completion. That means 2029 and 2030's condo supply is already baked in today. And here's what's coming. Our completion forecast for the next few years are 20,000 condos for 2026, 15,000 condos for 2027, and 13,000 condos for 2028. And for 2029 and 2030, basically number closer to zero. Yes, zero.
Zero.
Just so you know, we get all these data from a third-party analytics company that we have consultation agreement with. The company is called Urbanation, and I've shown you some parts of their work in my previous videos. So just wanted to let you know about the source before I move forward. Let's get back to zero. That is not an exaggeration. It's the direct language used. Why? Because the construction starts have collapsed. Historically, 15,000 condos start per year in the city of Toronto. This year, just over 2,000 condos started. That's an 87% collapse in new construction starts. And units under construction are falling below 50,000, the lowest we have seen since 2017. You cannot deliver condos by magic all of a sudden. No sales means no construction, means no completions. So you might be wondering why new condo projects can't build. So here's the real reason, or the real issue. Developers can't launch new projects because they cannot hit the lender requirements. A project needs approximately 70% pre-sale to get financing. Right now, new launches are around 40% on average sold. Again, this is an average. Some projects sold like maybe 15%, some projects sold like 55%. So on average right now, pre-construction projects that we are aware of are sold about 43%. So lenders won't finance at that level. Meanwhile, the older projects that has been launched during the stronger times are 83% sold that are under construction and 93% sold that are at completion. Those condos will finish soon, but new projects can't even get out of the gate. Why developers can't cut prices to attract buyers? Some of you may ask. I've heard that. If buyers aren't purchasing, why don't the developers just lower the prices? So here's the math. The construction costs since 2017 rose by 92%. So we have 92% increase in construction since 2017, which is almost 8 years ago. Toronto development charges since 2017 went up by 171%. That's no joke. Development charges on a typical condo apartment is about 130,000 per unit in the city of Toronto. The hard costs ranging between 35 to 40%, and the government fees is between 25 to 30%. Lenders require 10 to 12% profit margin. For that reason, developers have only be able to drop prices about 6 to 7%, because cutting further means selling below replacement cost. Banks will not finance below replacement cost, because that's not good news. That might mean bankruptcy 4 years, 3 years, 4 years, 5 years down the road. So the result is that the project dies before it starts. This is why Toronto's pre-construction industry is frozen. Some of the projects didn't even break the ground. They canceled the project. Some of the projects didn't even basically reach to that level. Consumers see lots of listings, lots of inventory right now in the market, but that is temporary and misleading. Here's the real inventory landscape. These are the unsold supplies that we have in the market right now. In pre-construction, the unsold supply is 9,000 units. Under the construction, projects that are unsold is about 10,000 units. The projects that are completed but they have unsold units, they are under 3,000 units. Resale condo listings right now are hovering between 8 to 9,000 units. And here's the warning: if that $10,000 under construction units fail to sell at completion, the resale market basically doubles its inventory overnight. But after this wave completes, there's nothing behind it. That's why the memo calls this period the condo cliff followed by a condo desert. Right now, it feels we have huge oversupply, but by 28, 29 to 2030, Toronto is starting at one of the biggest supply shortages in its history. Now let me tell you a little bit about the rental market. Record completions in the condo market in pre-construction projects have temporarily cooled down the rental market. Rents are down 4.5% year over year. Vacancy is now between 3 to 4%, hovering between 3 to 4%, which is neutral. And 2/3 of purpose-built rentals are offering 1 to 2 months rent-free. And one more thing, the effective rents in Toronto right now is about, on average, again, some areas are about $4.50 per square foot, some areas like $3. So on average, we are looking at $3.60 per square foot. But this is not the new normal. This is simply what happens when 60,000 units suddenly arrive to the market. As completions fall off a cliff in 2027 to 2029, rents will also tighten, vacancy will drop, vacancy rate will drop, and incentives will disappear in a couple of years from now. And the demand will overwhelm new supply. Rental market always lead the ownership market. First, rents rise and then condo prices follow. That's what we have seen in the previous cycles in Toronto's condo market as well. So despite the rough headlines that you see on the news outlet, certain segments in the condo market are already stabilizing. According to the November 2025 report by Toronto Real Estate Board, or TREB, 416 condos, which are City of Toronto condos, are outperforming 905 region condos. 416 condos saw the smallest year-over-year price declines. Toronto Central condos had over 1% increase year-over-year, and 905 condos fell about 9%. Downtown looks like it's absorbing the supply much faster. Of course, right now we see fewer cranes and stronger demand, and we see more renters returning to the downtown core. And if you want to talk about the value segments that are exploding, I can tell you that condos that are under $500,000 or $500,000 went from 14% to 32% of all sales. Sales in that segment are up 76% year over year. Mortgage payments on average condos are now within $200 of the rent. So meaning that the mortgage payments are not from what you can get as a rental income from that unit property. Affordability has improved about 30% over the past 2 years when it comes to condos. And this is exactly how the recoveries begin. First, some home buyers return, then investors test the waters, then activity starts to building up from the bottom. Let's talk about the shift that everybody will feel by 2028 to 2030. So here's the part that nobody talks about. Toronto doesn't feel the condo shortage today because we're drowning in completions, in the condo completions, but housing cycles have a lag. What we are seeing right now is the result of decisions that were made in 2018 up until 2021. So these are the condos that are being completed this year or next year. What we will feel in 2028 up until 2030 is the result of the decision being made today, which is almost no new projects starting. When a city grows and the supply dries up, there is only one outcome: higher rents and higher prices. That would also translate to higher demand for resale and a renewed investor cycle, and that is the setup that is forming right now. That is why I say affordability has no chance long term if the completions collapse. So as you can see, we are right now living in a rare moment where completions are high, prices corrected, rents has been softened, and incentives in the rental market exist. exist. And also buyers have gained negotiation power, but this moment won't last forever because Toronto is moving from 60,000 units supply way straight into a near zero supply desert in 4 years from now. So if you're an investor, a first-time homebuyer, or even a policymaker, pay attention. You need to understand this pipeline map. Toronto's condo market isn't oversupplied. It's temporarily inflated with supply right before one of the biggest supply shortages the city has ever seen, and that's not very far away. That's 4 or 5 years maximum from now. In my opinion, that is the calm before the storm. So if you found this breakdown, this video valuable, make sure to subscribe to my channel, share it with your friends, and hit that like button. If you need a consultation meeting with me, use the link down below. And I would also ask you to leave a comment. Do you think will Toronto run out of the condos by 2029 or 2030? Let me know what's your opinion about it, because based on the data, we're heading straight in that direction. But I would like to know your opinion as well.